Hi, this is GBPUSD and today it's Sunday 23rd of June 2013 and the time is 22:29 GMT. The Asian markets just opened and we are looking at the H4 chart of the pair, and we are going to use a very powerful Fibonacci strategy, favorite of mine, which has a very high success rate, and since one of its prerequisites is that the main wave we see here must be above 250 pips, we have here a wave of 750 pips, so we are expecting a huge move to happen. Which are the criteria of this trade setup? We don't use any other time frame, just this. We don't use any other indicator except RSI. I will tell you when. And here I have drawn the Fibonacci levels from the lower point of the wave, of the big wave, up to the point where the correction started. The correction started here, so this is my 0 point. But it is not a mistake if you put your 0 point here and you draw your Fibonacci so that 100 is up here. Okay. So it's not wrong, it's not a mistake. But you must have in your mind when we go long and when we go short, and when the price goes up and when the price goes down, which are the levels which are our entry criteria. So the first rule is that the price has to enter the trigger zone. The trigger zone is between 38.2 and 61.8 Fibonacci levels. To help you visualize it, I will insert a rectangle to show this zone. Well, the color is a bit extreme, so let me pick a less loud color. I think this is better. Okay, so once we have one candlestick, doesn't matter if it is a bear candlestick or a bull candlestick, just one candlestick closing inside this zone, the next criterion is to see if we will have one whole candlestick above this level, which is 23.6. If you have put your Fibonacci reverse at the opposite order, then here will be your 75 level. So it doesn't matter if it is 23.6 or 75, whichever is here. This is, if we see a candlestick, a whole candlestick closing above this, then we should consider entering long. We need one more criterion. I will tell you which is this. And if we see a whole candlestick closing below this level, it is 75.0 here. It may be 23.6 if you draw the levels the opposite order. If we have a whole candlestick closing below this level, then we should consider entering short. Now, the second criteria for our entry is that if we want to enter long, if we see a whole candlestick above this level and we want to enter long, we will use RSI on the daily time frame. We will check on the daily time frame if RSI is above 50. If RSI is above 50 on the daily time frame, and we have one whole candlestick above this level on the H4 time frame, we enter long and we place our stop 20 to 30 pips below this Fibonacci level. We trail our stop to the every next Fibonacci level. When price goes to the next Fibonacci level, we put our stop here. Okay, we wait till price goes to the next Fibonacci level to move our stop from here, here. Okay. Now, if we enter short, when one whole candlestick on the H4 chart has closed below this level here, 75 on my chart, it may be 23.6 to yours if you have reversed Fibonacci levels. Then we go to the daily chart and we look for RSI, and if RSI is below 50, we enter short. We enter short and we place our stop loss 20 to 30 pips above this level. When price passes through this level and goes to the next Fibonacci level downwards, we trail our stop from here, here, a few pips above this level. So I recap. First criterion was met because the price is inside the trigger zone. We had more than one candlesticks closing inside the trigger zone. Now we wait for the second criteria to be met. We will enter long if we see the price making one whole candlestick, if we see one whole candlestick on the H4 chart closing above this level of Fibonacci. If we see that, and if RSI is above 50 on the daily chart, we enter long and place our stop a few pips below this Fibonacci level. If the price shows that one whole candlestick on the H4 chart closes below this level, and RSI on the daily chart is below 50, then we enter short and we place our stop a few pips above this Fibonacci level. Thanks for watching and happy pips.